Hi there, it's Kevin Casey from LeGrow. We are now on video number 3 with our guest Beth Porter, who's a tax specialist, as we talk about taxes. And this is on all the ins and outs of a company vehicle. Drive it away, Beth.
Yeah, as a business owner, there's always that question of whether or not you should have a company car or use your personal vehicle, and how do you account for that or compensate either the owner or even the employee for that. Once upon a time, all the vehicles were company owned, and I think over the years, obviously, Canada Revenue Agency sees that there's a personal element in having that vehicle at your disposal, just merely parked by your door every evening, for example. So they did impose, and this goes back a long time, so it's nothing new. There are taxable benefits associated with having company vehicles. And there's two components to that. One is they call it the standby charge, which is just merely having the car available. So having it parked by your door every day by your house means that there's a taxable benefit element there. And then the other part is the operating benefit that's associated with it. So if the company is paying for the gas and the insurance and the repairs and maintenance and all of those other operating costs, then there is a per kilometer charge that really goes into the taxable benefit calculation. And there are some ways to reduce the benefit, but the key piece of that is that even if the car gets old, there is nothing that reduces the standby charge because it is based on the original cost of the vehicle. So oftentimes we help clients plan around this to find the best way for them to own the vehicle, whether it's in the company name. If it's got a lot of high usage, and sometimes you have special use vehicles, so you could be a pickup truck that's used for construction, for example, and maybe it's used a really high percentage for work, then that probably reduces the taxable benefit element. But certainly if it's, not that type of vehicle and it's just one for, going to the bank or going to the post or running to see a client, maybe there's better ways that we could do that. And of course, there's limits that Revenue Canada places on some of the expenditures, whether it's, on a corporate side or even on a personal tax side if someone was self-employed, for example. So having a company doesn't get you around those types of things. So again, we work with the client to kind of come up with the best solution. But by and large, mostly having them owned personally, unless they are very, very high business use, is probably the best way to go. And then providing some kind of per kilometer mileage reimbursement to the employee.
And if you did a per kilometer, do you have to keep a logbook, or is that something you literally got to do also, along with remembering to keep receipts?
Yeah, so you would have to keep some kind of evidence to support the mileage. So even if you had a corporate owned vehicle at your disposal, you are still required to provide the number of kilometers that you use the vehicle during the year for personal versus business use. And I will note that to and from your normal place of business every day is considered to be personal use, not business related usage. And even if then on the converse, if you had a personally owned vehicle and your company was reimbursing you for the mileage, again, you have to provide evidence or support for the mileage and how that was calculated. So it doesn't necessarily have to be a logbook, but it has to be some way that you can provide evidence to support the number of kilometers that were used.
Okay. Is there, if you had a company vehicle and you estimated that you used it 30% for business, 70% personal, are they ratios that CRA allow you to use so you get 70% of it that's a personal benefit and 30% legitimate corporate, or is that just too vague?
That's kind of too vague. They did come out with a simplified way a couple of years ago whereby you can keep track of your usage, so actual log or actual track of the usage for a particular period of time. Then that's considered to be your base period. And then go forward, you can use that as basically a guideline as long as you do a sampling every year of what that usage is to make sure that you're still on track. That's something that they came out with a couple of years ago to just make it a little bit simpler for everybody.